Hey everyone, what's up? This is Mozart speaking. So, yesterday, I opened a long position at 82,500, and today I closed it at 82,400, basically breaking even. The reasons. And basically why I did it. Well, take a look. So, there was a chance that they would buy this candle back up above the 200 moving average, that white moving average, meaning at least up to the 83,500 mark. Then, the rationale for holding this long was higher. It was higher because we now have a gap on the CME at about 87,000. But we also have an unclosed gap on the CME below. So we haven't closed it completely. Here's what it all looks like right now. There's a gap up top. Here's the open gap. And the gap below is not yet completely closed, somewhere around 77 on the CME. Or, if they had pushed it down much harder, they would have updated that low, and we could have come down somewhere around here to the yearly moving average. Then it would have been possible to hold on as well. I would probably have averaged here, as before, if it had gone down by a larger volume. Then we would see a spring, I would close and profit again, and everything would be as usual. But you all know that very well. I pulled out the last two longs from here in profit, and the first one was a nice profit. I closed this one at break even. That is, the series is quite good, considering the general situation on the market. We haven't had any losses here so far. But I don't like the current close. It's sluggishly fluid, that's what I call it. It closed, the reversal pattern. I'll explain what I mean right now. And it closed below the 200 moving average. The risks are high. There's an increased likelihood that we'll test the yearly moving average. What's turning around here? So, it seems like, how can we be reversing at some locally conditional bottom? This is the 4-hour chart. But you have to understand that in trading, in real trading, things don't work as clearly as they do in the textbooks. What do I mean? So, we were falling, and then we hit the bottom. That's where the reversal started. The bottom was around the mark of about 78,500. And from this point, we drew a double top. Is the double top above this point or higher? Are we reversing? Yeah, there's been a rise. From here to here, a local rise, and it can be reversed by this double top. Although, it might seem globally that we've fallen here, and that we're going to reverse, we're not at the top. No. Unfortunately, reversal patterns also work for trend continuation if there's something to reverse. So, here we have a closed pattern. Here's the neckline, and I don't like it. This neckline here could be a false breakout. And maybe we'll go up. There might not be a false breakout here, and we could, for example, go straight down, or we could go up, close the gap on the S&P, and then head down from there. I can guess here endlessly. I only consider the facts and probabilities. And, based on the probabilities, if we've closed below the neckline, then the likelihood of us going lower has increased. Maybe we won't go down, but the probability of that happening has increased. And in this probability, it's much more comfortable, even mentally, to just break even. Break even and to hell with it, come what may. Whatever will be, will be. If we buy all this back, we'll come back here, somewhere above the 90 mark, I'll go long again. Only here. This will give us a higher probability of going long again. Or are we going to drop? Right here, and I'd rather jump back into a long position here. But at the current level, considering all the factors, and taking into account Trump's instability, and the fact that the markets don't understand him, along with the inflation and CPI situation, and that Fonda is also feeling pretty bad, I don't see the point in staying in this long position. There are a lot of factors, and you have to understand that I can open this long position and close it. Every condition for entering changes every day. I can open and close a long position 2 to 3 times a day, not necessarily every day. Well, that's trading. You have to get used to it. If I invest, I work differently. When I'm trading, I look at each specific candle. And what volume went through it, how it was closed, and what else was happening in the outside world. And only by the totality of all these factors I can make the final decision. Many do not understand this, do not understand. Many think, how can I turn over like that? You can't just open it and not twitch. No, I can't. It doesn't work that way. It doesn't happen that way. I can't, like a fool, set the entry. Stop, and take 1 to 3 and sit until the end, waiting for this take 1 to 3. So, trading doesn't work that way. It just doesn't happen. For the same reason, I work with a long position at a 1-to-1 ratio, and I very rarely go for 1-to-1. Much more often, I exit even at 1, and that's enough for me. Much more often, I go out even 1, 2. That's enough for me. Even like that, I make money. You can open the entire history of trades. I'm not just putting it out there for no reason and see how it works. You don't need to look at it in a moment. Look at the history to see how this strategy works. No need. Don't look at it in a moment. Look at the history to see how this strategy works. So, considering that this figure is closed, and below it is the annual moving average, I'm afraid there might be a test of this annual moving average. Same thing on Monday. The same thing. Here's the yellow line. We can retest it. The yellow line is at around $75,000. Right now. Yeah, we can retest it. So it was pretty much the same for us in the summer of 24. So we went through, bounced back. On August 5th, we retested it. We retested it twice, actually. The same thing happened after the Chinese ban in May 21. Here's the figure. So we closed with this dump candle. Did we retest it twice? We went up, but maybe we won't retest it. That is, it happened that they fell without a retest. For example, here they fell without a retest. For example, here they didn't retest. They just missed it a little and went up. But you see, for yourself, the probability of a retest in such events is, as it were, 50-50. Maybe it will happen, maybe it won't. I don't want to guess, but why should I sit in my current position if I can exit now and enter either here or when it bounces back? So, it might swallow up more than half of the candle here, and then I can re-enter with lower risks. It's just silly to stay in this position right now, at least from my objective point of view. There's a very high risk. So, based on the closed figure and the current situation, looking at the metrics in the blockchain, check this out. This line, right here, could very well become a likely level of final support. If we break through on the weekly charts and the volumes are below this line and we close somewhere, like right here, or maybe around here, then, with a much higher probability, all of this is likely to go even lower, and we could be looking at a local bear market. Wait, a local bear market. I'm not saying that this time, if we do enter a bear market, if we close below the yellow line, it will be just as bearish as it usually is in cycles. It'll last about 2 years. Yeah, this bear market. Hardly. When Bitcoin and the ETF came in, they broke all the cycles. Right now, this cycle is going extremely unusually. Not like everything else, it's new, it doesn't repeat anything. I think you can see that for yourself. Neither by fractals, nor by structure, nor by alt seasons. Nothing repeats. So, I think we can expect some kind of local bear market with certain targets in mind. At least, test it. These lows. At least, this is where to start accumulating spot. On a large volume, I'm planning if we go down here. So, if we close below the 50-week moving average, we could be stuck going sideways for a long time and eventually end up at 100. Around 60,000. It's unlikely to hit 200. Well, it's pretty unlikely, even within the bear market. This local one. But just in case, I'd leave some limit orders around 50. Right here. It will catch up by that time. 200. So, it's still too early to talk about that option. But right now we're approaching a key level that separates a global bull market, a strong bull market. Objectively speaking, we're still transitioning into a state of weakness. If we break this moving average, then targets open up. 1, 2. As much as I don't want it. As much as you don't want it. This is the reality. That's the point I'm starting from, the one I have to make decisions based on. So I can close and open trades 10 times a day. And it also heavily depends on what Trump says. Will, Powell too. We need to keep an eye on everything. When you're trading, you have to keep an eye on everything. And on top of that, we broke the weekly. 1, 2, 3. 1. We broke it, unfortunately. It's like, here's the turning point. Right now. The maximum. I could wait. Even if we get a bounce right from the current levels, it could happen from here. Maybe. It's fine. It's the probability of such an event. Not small. Somewhere over here. So, 87. Close the holiday gap, and then closer to 90. Here are some targets with a bounce. The area around 90. There could be a bounce, roughly speaking. But this is already a short zone. It's a local short zone right now. And then it could still go and hit the 50 moving average. even if we see a bounce right now. So why close out if there could be a bounce? Well, because the probability of that bounce is the same, 50 to 50. If it were a little higher for me, according to my metrics, I would keep it. Right now, it's not higher, and I don't want to play roulette. If I see right away that something is going wrong, and I don't like something right away, I won't sit in a position like a fool and wait and hope for a miracle. I make decisions in the moment. That's it. We'll keep an eye on it. Thanks, everyone. This was Mozart on the line. I hope we understood each other. Have a great week, everyone. Bye for now.